If you had invested $10,000 in Tesla when it was founded in 2011, can you imagine how much you'd have today? I'm guessing your answer will be like $30,000 or $40,000. Well, you're not even close. If you'd invested $10,000 in Tesla the day its stock went public, you'd be worth almost $1.5 million today. Of course, it was a risky bet, but know that it can be replicated even today by following all the steps that I will tell you in this video. Let's start. First, congratulations. If you have $10,000 saved, you're already ahead of most people who barely manage to keep a few hundred aside. That also means you have discipline. The real question now is, what's next? Where do you direct that hard-earned cash so it multiplies? The truth is, there isn't a single perfect strategy for everyone, but there are several solid paths you might explore. Let's break them down. One option is investing in individual stocks, high-growth businesses that could disrupt an industry. Over the past few decades, certain companies have skyrocketed beyond anyone's wildest dreams. Amazon and Tesla are classic examples, but you don't have to bank on the next Tesla alone. In fact, spreading your money across a handful of promising tech or growth companies can help reduce risk. The upside might be enormous, but you have to be comfortable riding out the roller coaster of stock price swings. If you're patient and if you choose wisely, you could see your $10,000 grow substantially over time. Another strategy is to keep your eyes open for big opportunities rather than rushing into every small one. Many people get caught in the fear of missing out. They see a rising stock or a hot investment tip and jump in blindly. Unfortunately, that can lead to quick losses. A better approach is Buffett's famous rule: don't lose money by being reckless. If you haven't found a truly great chance, there's nothing wrong with letting your cash sit briefly in a safe place. It's far better to wait for a clear opportunity, maybe a market dip or a company you deeply believe in, than to force an investment out of impatience. You could also consider putting some of your money into a tax-advantaged account like a Roth IRA if you're in the United States. Why a Roth? Because it lets you contribute after-tax income, invest it, and later withdraw the gains tax-free once you reach the required age. If you place a chunk of your $10,000 into a Roth and then pick solid, long-term investments, like a broad market index fund, you could be setting yourself up for serious gains over the coming decades. Even if you don't have exactly $10,000, smaller amounts can still add up dramatically, thanks to compounding over time. The important thing is to start. Now let's talk about entrepreneurship. Putting $10,000 or less into starting or expanding a small business can be a life changer if you have the right idea, passion, and plan. Some businesses, particularly online, can launch with minimal upfront costs. Whether it's an e-commerce store, a consulting service, or a digital product, your $10,000 might cover essential tools, training, or initial marketing. The upside of having full control is huge, because unlike investing in someone else's company, you're the one steering. If the business thrives, your returns could dwarf anything a standard investment might yield. Of course, the risk is higher, so it's crucial to research your market and proceed carefully. Real estate is another classic way to multiply money, though $10,000 might not instantly buy you a property. In many markets, you'd need a larger down payment. But that doesn't mean you're stuck. Some people partner with friends or family, pooling resources to invest in rental properties. Others look for opportunities in more affordable niches, like mobile homes, storage units, or even REITs, real estate investment trusts. In any case, real estate can leverage the power of mortgages. You put in your portion, the bank lends you the rest, and if you choose a decent property in a decent location, rent can cover most, or all, of your mortgage. Over time, you build equity and can see the value of your investment rise, often much faster than if you kept your money in a savings account. If you're more cautious or want to balance out risk, you could also put part of your money into index funds or exchange-traded funds, ETFs. These track broad markets like the S&P 500 and have historically provided steady growth over long periods. You won't get the thrill of a stock that grows 1,000% overnight, but you also reduce the chance of catastrophic losses from a single bad bet. Index funds are easy to set up, require minimal ongoing attention, and let you ride the general upward trend of the economy. It's a friendly approach for anyone who doesn't want to obsess over picking individual stocks. Even if you only have, say, 3,000 saved, or 5,000, the same principles apply. Start small. Put some into a safe, diversified fund, or hold it until you identify a clear opportunity. The important thing is to keep moving forward, keep saving, keep learning, keep looking for ways to make your money work for you. Over time, your small contributions can turn into a substantial amount. But remember, there's one thing that truly sets successful investors apart: education. Don't just throw your money around because someone on social media claimed to have the perfect formula. Research, compare options, and keep building your financial knowledge. Read books, watch credible videos, follow market news carefully. If you choose to invest in real estate, learn from people who've done it successfully. If you decide to start a business, study proven strategies, and maybe join a supportive community that can guide you. The more you understand, the safer your decisions will be. It's also wise to maintain an emergency fund. If your entire $10,000 goes into risky ventures, a sudden job loss or medical bill can force you to cash out at the worst time. A general rule of thumb is to keep 3 to 6 months worth of living expenses in a quick access account. Yes, that emergency fund might not earn much interest, but it shields you from desperation, moves that could wipe you out. Once you have that safety net, every additional dollar can be channeled into growth opportunities with less stress. And let's not forget discipline. It's tempting to celebrate the moment you see profits and blow the money on a vacation or a new gadget. But if you reinvest those gains, your future gains could be even bigger. Consistent reinvestment is how small amounts compound into large fortunes. The best investors rarely cash out everything on the first big spike. They might take a bit of profit, sure, but they let the rest keep working. Over time, this cycle can lead to staggering results that people with short-term mindsets miss. If you're still unsure which path suits you, stocks, business, real estate, or something else, start by exploring all of them on a small scale. Put a fraction of your money into a basic stock portfolio. Try a mini online business idea on weekends. Study property listings in your area just to see what's out there. The experience alone will teach you heaps. As you learn what resonates with your skills and interests, you can lean in further. Remember, you're not locked into any single course of action. If a project fails, consider it a lesson, not a life sentence. There's no shame in refining your approach. Finally, keep your optimism alive. $10,000 might not seem like a fortune, but it's more than enough to jumpstart a significant journey. Many millionaires began with far less. The key difference is they focused on consistent, informed action. They refused to let that money sit idle, while inflation ate away its value. They believed in themselves, learned continually, and made course corrections whenever necessary. You can do the same even if you start with smaller amounts. Whatever you decide, whether buying a few promising stocks, launching a side hustle, or partnering with someone on a small property deal, remember to think long-term. True wealth doesn't usually form overnight. It grows slowly, often quietly, as each win stacks on top of the last. By staying patient, educating yourself and reinvesting profits back into your goals, you create a system where your money works for you 24/7. And if you're determined to keep pushing, that system can expand into something that truly changes your life. So here's the summary. If you have $10,000 in the bank, start by clarifying your top priorities. Keep enough for emergencies, then look for real opportunities, either in the stock market, real estate, or your own business. If you're unsure, dip a toe in each area, see what clicks. Keep your overhead low, your curiosity high, and let go of the fear of missing out on every little chance. If you remain patient and disciplined, that initial $10,000 can be the foundation of a secure and prosperous future. Don't let it gather dust in your account. Put it to work and watch what happens when your money begins to multiply on your behalf. If you liked the video, like and subscribe so you don't miss the next videos, and I'll see you soon.